Hi guys! Welcome back to my channel. For today's educational vlog, I'll be talking about Chapter 6, Lesson 3C, which is Fundamentals of Taxation. Without further ado, let's begin.
Fundamentals of Taxation. Now let's start first on what is tax. Tax is defined as a compulsory contribution levied on persons, property, or businesses. Meaning to say, we are obliged to pay taxes for the support of government. Another is, it is for economic and social operations. In other words, it is money paid to a government and it will fund programs and services. Next, we have nature of taxation. The nature of taxation is first, it is inherent in sovereignty, which means that it may be exercised but it is not expressly granted by the Constitution. Second is, it is legislative in character. It means that taxation is a state power exercised through the country's legislative body, and only the legislature can impose taxes. Third is, it is subject to constitutional and inherent limitations. So, the Constitution stated that revenues through taxation must only be used for government operations and for public welfare, meaning to say that taxation have limitations.
Next is canons or principles of a sound tax system. The basic principles of a sound tax system which identify the following. First is fiscal adequacy. Taxes collected by the Bureau of International Revenue, or also known as BIR, sufficient to meet public demands expenditure. It means that the sources of revenue taken as a whole should be sufficient to meet the expanding expenditures of the government, regardless of the business conditions, export, taxes, trade balances, and problems of economic adjustments. Second is administrative feasibility. The payment of taxes must be taxpayer-friendly. It means that tax should be properly and efficiently administered by government in order to be clear and plain to taxpayers, which helps to enforce with least inconvenience to the taxpayers. Third is theoretical justice. This is the ability to pay principal, which means that people with greater income or wealth and can afford to pay more taxes should be taxed at a higher rate than people with less wealth. Moving on to the basis of taxation. First is the Constitution, the fundamental law of the land. Second, statutes, law passed by the Congress or presidential decree. Third is Bureau of International Revenue rules and regulations. Fourth, judicial decisions on tax cases by the Supreme Court. Fifth, provincial, city, and municipal ordinances. Sixth, observance of international agreements. And seventh, administrative rulings and opinions. Objects of taxation. The objects of taxation includes the following. Individuals who earn a considerable amount of income. So these include an amount of income as a worker or a businessman in partnerships or corporations, including those who inherited a property or given a gift or donation of a considerable value.
Next is tangible and intangible properties. Tangible properties refers to personal properties that can be moved or relocated, while intangible properties are real properties, which are immovable properties. Lastly are transactions, consumption's interest, import and export, and privileges. And now, let's move on to the situs of taxation. When we say situs, it is a Latin term for place or location, which means the place where taxes are to be paid. This is related to objects of taxation, since every object of taxation should have a place where taxes are to be paid. So first we have income tax. This is paid to the place where income is earned, or the place of residence of the taxpayer. Second, real property tax. This is paid where the property is situated. Third, personal property tax. This is paid where the property is located. It is similar to real property tax. However, situs of taxation of intangible property is the owner's domicile, which means the place of permanent residence of the owner. And fourth is business and occupation taxes. This is paid to the place where the business or occupation is located. Next is, there are also limitations of taxation, and it has two types. The first one is inherent limitations. It is not affected by changes in the provisions of the constitutions. There are 5 things that needs to consider in inherent limitations. First, tax revenues must only be used for public purpose. Second, proper delegation of legislative power to tax. Third, government entities are exempted. Fourth, there are territorial jurisdictions. And fifth, observance of international law. Moving on to the second type of limitation, which is constitution limitations. It refers to more subject to change when a new constitution is introduced in the country. First, we have observance of due process of law, which is Article 3, Section 14.1 of the Constitution says that no person shall be held to answer for a criminal offense without due process of law. Second is equal protection of the law. In Article 3, Section 1, no person shall be deprived of life, liberty, or property without due process of law, nor shall any person be denied the equal protection of the laws. Third is uniformity and equity rule. It is stated in Article 6, Section 28.1 that the rule of taxation must be uniform and equitable, and likewise progressive. Fourth is non-imprisonment for non-payment of poll tax. It is stated in Article 3, Section 20 that no person shall be imprisoned for a debt or non-payment of a poll tax. A poll tax, by the way, is a personal or capitation tax. Fifth, no appropriation for religious purposes. It is stated in Article 6, Section 29.2 that no public money or property shall be appropriated, applied, paid, or employed directly or indirectly for the use, benefit, for support of any sect, church, denomination, sectarian. Next, we have double taxation. When we say double taxation, it is taxing twice by the same taxing authority, which means occurs when an object of taxation was levied with 2 or more taxes from a single tax basis. There are 2 kinds of double taxation. First is direct duplicate. It is same income tax twice. Second is indirect duplicate. Taxes that are paid by the same individual or corporation. Basically, it is based on 2 or more different taxing bases. I have here an example of direct and indirect duplicate. An example of direct is income tax. When you earn income, you are responsible for tax payment, and you also have the burden. While in
indirect is GST or Goods and Services Tax. When you buy stuff, the shopkeeper is responsible for tax payment, but he can collect it from you. Obviously, it is indirect because you are not the one who paid the tax as a purchaser, since it will be collected by the shopkeeper. In this case, he will be the one to pay the tax. We also have avoiding taxation. So these are the other concepts related to taxation in terms of avoidance or non-payment. First is shifting. It is passing tax burden from one person to another. Next is capitalization, reducing the price of a taxable product. This is to lower the tax that will be imposed on its consumption. Next is tax avoidance, use of legally permissible method. It's reducing or minimizing the tax is legal, due on certain properties, items, and services. It is also known as tax minimization. Next is tax evasion. It is defeat or lessen the payment of a tax. Unlike tax avoidance, tax evasion isn't illegal and also known as tax dodging. Lastly, tax exemption. It is right to exclude all from taxation. And that's the end of my discussion. I hope you learned something from me.